Hi, this is Indranil and you are watching Business Bites in our channel, The Spotlight News, India's first online business news channel. In today's Business Bites, first news we have SEBI and BSE to challenge the FIR order against former SEBI chief Madhabi Puri Buch. Second news we have India's retail market is expected to reach at 190 lakh crore by 2034 as it is growing at over 8.9%. Third news we have protein drink and food startups are now looking beyond gym to turn mainstream with mass distribution. Fourth news we have Airtel is planning to launch IPO of Airtel Payments Bank and their data center unit Nextra in next few years. And fifth news we have IT companies are experiencing shorter and smaller contracts because of AI-led productivity and efficiency. In first news, the Security and Exchange Board of India, that is SEBI, and BSE to challenge the FIR order against former SEBI chief Madhabi Puri Buch. As per Mumbai court's order in directing the Anti-Corruption Bureau to register a first information report, that is FIR, against the former regulatory chief Madhabi Puri Buch, 3 current whole-time members at the watchdog and 2 BSE, that is Bombay Stock Exchange officials, on the context of the company Cal's Refineries, which was listed on the BSE in 1994. Where the complainant Sapna Srivastav has alleged that documents reveal procedural lapses and non-compliance in the IPO process. The Mumbai court has directed the Anti-Corruption Bureau to register an FIR and to investigate alleged irregularities in granting listing permissions to a company without complying with rules. The case were to be filed against the former SEBI chairperson and whole-time members Ashwini Bhatia, Anant Narayan and Kamlesh Varsne, and also against the ex-chairman of BSE Pramod Agarwal and its current chief executive Sundararaman Ramamurthy. Anti-Corruption Bureau is currently weighing the option of asking the court to recommend the case to the Central Bureau of Investigation, that is CBI, as it involves a complaint against past and present SEBI members where the capital market regulators, a statutory body under the Ministry of Finance, and complaints against officials attached to such bodies are ordinarily probed by the CBI. In second news, India's retail market is expected to reach at 190 lakh crore by 2034 as it is growing at over 8.9% in the last decade. India's retail market reached at 82 lakh crore in 2024 and the growth is driven by India's economic growth and an increasingly discerning and diverse consumer base. And the Indian retail market is expected to reach over 190 lakh crore by 2034 when the retailers capable of embracing India's diverse demographics and contrasting consumer behavior stand to gain the most. In India, the omnichannel dynamic has been crucial with the rapid surge in digital payment transactions, and online penetration will continue to climb where the majority of purchase pathways, over 58%, still remain purely offline. In present time, India is the fastest growing major economy where its population is marked by striking contrast of burgeoning middle class and rising influence alongside price-conscious consumers, a digitally savvy Gen Z coexisting with an increasingly significant 45-plus cohort, and an expanding female workforce which are helping in shaping the new purchase behaviors. With distinct consumer groups where each is having their own unique needs even within a city, at the heart of this expanding lies an increasingly discerning and diverse consumer base where more households are moving into influence, and at the same time value for money remains the key to decision making. so the retailers must strike a careful balance between driving aspiration and in maintaining affordability by recognizing the different opportunities and by picking sharply where they want to position themselves in the new India or the new Bharat. In third news, protein drink and food startups are now looking beyond gym to turn mainstream with mass distribution. Earlier, only gym goers were having protein shakes, but now with dozens of brands and startups disrupting the market by offering entry-level packs priced as low as 10 rupees and above, and with mass distribution plans where the companies are creating everyday foods which are protein rich like protein shots, bars, snacks, confectionery and premixes. Currently, the market size of protein drinks and foods is of 16,000 crore, which is exploding because of flavors and formats as companies are trying to get first mover advantage, while 45% of the market is of performance protein which is aimed at regular gym goers, and the remaining 55% is lifestyle protein which is seeing the highest growth at this point of time. Companies like ITC, which is acquiring Yoga Bar, co-founded by V.S. Kannan Sitaram, Hindustan Unilever is investing in Oziva, and Zydus Wellness is acquiring Naturel, the owner of Max Protein. In this segment, recently entered Amul with a dozen of their products like shakes, buttermilk and whey is currently available only on their own D2C platform, which has seen 100% growth in last 2 years. Recent investments in protein startups include Christ Capital and Motilal Oswal Alternates investing in omnichannel nutrition platform HealthCart. European investment firm Sofina is investing in The Whole Truth, while Super U is raising fund from Zerodha-backed venture firm Rainmatter. When Super U, which is co-founded by Kishore Biani-backed Think9 Consumer Technologies and actor Ranveer Singh, has started with bars and wafers, and soon they will move into biscuits, powders and into breakfast cereals. In fourth news, Bharti Airtel is planning to launch IPO of Airtel Payments Bank and their data center unit Nextra in next few years. Airtel Payments Bank has started operations in 2017 and clocked a net profit of 18.5% on revenue of about 700 crore in the December quarter of financial year 2024, is likely to be the first off the block as it needs to list within 10 years. And Bharti Airtel's data center subsidiary Nextra is currently serves all the hyperscalers as well as some domestic companies. Nextra offers a data center across more than 120 locations to enterprises, hyperscalers, startups, small and medium enterprises and to governments. And the company is expected to double their existing capacity to over 400 megawatt in the next few years. Presently, in Nextra, 75% is owned by Bharti Airtel and 24% is owned by private equity firm Carlyle, when for the next couple of years with big-ticket investments planned in building data center capacity and acquiring more land for this purpose. Nextra competes with companies like NetMagic, Control S and ST Telemedia, and at present they has around 112% market share with a revenue from operations as 1,826.6 crore for 2023-2024 with net profit of 232 crore. Bharti Airtel's revenue has increased by 9% year-on-year to 5,646 crore in December quarter in 2024. However, the revenue was 5,655.5 crore in the preceding July to September quarter, when the company is seeing an immense scope of growth, particularly in the cloud segment with cutthroat competition in segments like subsea cable and allied sectors with 30 to 40 players vying for a pie of this market. And in fifth news, IT companies are experiencing shorter and smaller contracts because of AI-led productivity and efficiency. In present time, it is likely to see a decline of longer tenured contracts upwards of 5 to 10 years with a greater number of shorter period and smaller sized deal going forward. And also there is a call for the outsourcing model with a focus on outcome-based projects than just people-led model. In that context, for instance, in June 2024, Xerox signed a $490 million contract with Tata Consultancy Services, which was earlier a $2.5 billion deal signed in 2013 and was expected to expire in December this year. On the other side, in March 2024, Vanguard expanded their scope of work with Infosys, which has previously signed a 10-year deal with $1.5 billion in 2020, where German automobile major Daimler is also in talks for early renewal of its over $3 billion contract for 8 years signed in 2020 with Infosys. This trajectory in this segment is happening mainly because of 3 key points, whereas first, there is a strong generative AI interest as clients seek to leverage generative AI in both IT operations and business functions and also align their large IT engagements accordingly. Second, vendor consolidation is becoming more aggressive where companies like Telstra recently reduced their 18 vendors in data and AI to just 2. And the third key point is that deal tenures are expected to shorten. This comes even as service providers prefer long-term contracts to recover their investments. But for now, clients want to keep their options open in response to technological changes, and that resulting long-term deals such as 10 years agreements will become increasingly rare. So these were the top 5 business newses from Business Bytes in our channel, The Spotlight News, India's first online business news channel. So thank you very much for watching Business Bytes and signing it off.